Rajesh Subramanian, Chief Executive Officer and Managing Director of Firstsource. He joins us live now. Rajesh, good morning. Thank you for joining us. Before we get into specifics, a word on how things move for Firstsource for the quarter gone by. What you've reported is pretty much you'd indicated earlier that you would be able to hold on to a steady path despite macro challenges.
Good morning, and it's a pleasure being on your show. Q1 was a very good quarter in terms of revenues came in 6.5% higher than the same period last year at 719 crores. Our operating profit, which is the true measure of the health of our company, came in 87% higher compared to the previous period at close to 62.5 crores. And our profit after tax at 42 crores represents a 43% increase compared to the same period last year. So overall, I'm very happy with our performance. I think the engines of growth that we are investing in have started to fire in the healthcare business and the customer management business. We still are facing headwinds in our collections business, financial services collections business in the US, as has been consistent in the past. But overall, I'm very happy with our quarter and our margin expansion, which is clearly evident. We grew margins at the operating EBIT by over 3%. Margin expansion will continue in the ensuing quarters, backed on very disciplined and profitable growth.
Rajesh, your margins, however, have declined this quarter. What was the hit that you took on account of the salary hikes, and how much have you gained because of the currency weakness? Today we're staring at 61.42, and are you still confident of a 200 basis point margin expansion when it comes to FY14 numbers?
Excellent question. I think first let me take the currency question. The currency, our hedging policy is on a one-year forward basis. So for Q1, the delta between the currency benefits we had last year and in Q4 and in Q1 is not material. But going forward, in Q3 and Q4 and the ensuing quarters of next financial year, we will get the benefit of higher hedges based on with the currency environment today. In terms of the margin decline, the margin decline has been only at the EBITDA level. At the EBIT level, there is an expansion. At the PAT level, there is an expansion. And Q4 is traditionally our strongest quarter from a seasonality perspective. In the US, the collections business generates a lot more revenue per collector than in the prior quarters, and that falls off in Q1. So we typically get a $1.5 million uplift in revenues, and pretty much 60% of that flows into the bottom line. So that falls off in Q1, plus salary increases for the agent population in our company has been in the offshore locations anywhere between 8 to 10% and abroad between 2 to 3%. So despite the fall off of seasonality and the increase in wages, our margin expansion is demonstrable. And if you take a look at our EBITDA margins in Q1 last year was 8.2%, it's 11.2% this year. So there's a 3% margin expansion year on year, which sets me up very well to achieve some of the margin targets we have guided to the street.
And 29 to 31 billion rupees revenues and rupee depreciation is only going to help aid this further. Is that a fair assumption?
That's a fair assumption, yes.
You also have a dollar denominated debt of about $45 million. So do you think somewhere the rupee tailwind will get nullified?
I actually know our net debt is about $167 million, and it's in our US books. 68% of my revenues are delivered onshore, which delivers significant levels of profitability, which services both the interest and the principal repayments, which are in our US books. The support that I need to service $45 million a year of principal repayments and $11.5 million of interest repayments. The net deficit that we need to support through our receivables book is about $11 million, which is an open position we keep on our covers at any point in time. So I don't have any headwinds from servicing my loan, given the fact that my overseas earnings act as a natural hedge. and any gap is hedged because of our hedging policy, which keeps a certain portion open to service this debt. So I'm in a good space as far as my loan repayments of my foreign exchange loans are concerned.
Rajesh, you've got a couple of savvy investors, market veteran Rakesh Jhunjhunwala as well, entering into your stock price. Is that somewhat of a pat on your back and a boost in confidence?
I think I'd like to believe that it's not just a pat on my back, it's to my management team, it's to my stakeholders, my board, who have all stayed the course, supported the company as we went through some difficult times over the last 2 years as we turned around the company, repaid the debt, and got a very strong promoter in Mr. Sanjeev Goenka. And I think the overall confidence levels and the mood is upbeat. The environment in the businesses we are operating is giving us significant opportunities. And overall, I think all this is testimonial to the fact that, it's a secondary transaction, so I can't comment, but, it's just testimonial to the fact that, people have taken notice that, there's something happening in this company which, fits their profile.
Okay, Rajesh, good luck and thank you for joining us. Rupee, where is the rupee? Has rupee stabilized?